Okay, welcome back. So 32 points on the Nifty, 13,850 is where we are at. Let's put up the stock of Lupin. It's under pressure despite an inline set of earnings. Stocks, and especially some of the larger stocks which have reported recently, and lots of them have sold off even though numbers have been pretty solid. I think the big case in point is really Asian Paints. But let's stick with Lupin right now. We have the management of the company joining us to discuss the third quarter results. Vinita Gupta and Nilesh Gupta, along with Ramesh Swaminathan, are joining us in the show to take some questions. Ramesh, let's start with the one-off this quarter. Can you tell us the one-time income that you reported this quarter? What was that on account of?
As you recognize, the top line EBITDA comes at 20.4%. But the fact of the matter is, we have a one-time income in our other operating income, as we disclosed. It's actually higher than normal. The normalized figure would be about 25 to 30 crores. That you recognize is because of the fact that MEI is a scheme which has been withdrawn by the government. But apart from that, there is also a settlement income that we did in America, which contributed to the bump up in that particular line. But if you were to knock this off and you knock off the other income as well as the forex, the operating EBITDA would be normalized at 18.6%.
Vinita is also here with us. Morning. The US business has shown growth both year on year as well as on a quarter-on-quarter basis. How did your key drugs like inhaler albuterol do this quarter?
So albuterol ramped up between Q2 and Q3. Two kind of product segments that typically are very good contributors in Q3 for us. One, the flu season products were just, the contribution was minimal, just given that it's one of the weakest flu seasons in the US as well as other parts of the world. And on the metformin franchise, where we had gotten out of the market but relaunched Glumets in September, we're in the build mode. So the contribution from that product also right now, this past quarter, has been minimal. So I'd say that, albuterol has helped us grow the business, as well as some of the other new product launches that we had in the last couple of quarters have helped us grow the business. And the baseline business has been fairly stable, but for these two areas that I talked about.
Ramesh, margins have been basically the key point of outperformance this particular quarter. You have been cutting costs. What are the cost-cutting initiatives? Can you outline them for us, especially on the specialty business side? And have the benefits all already accrued to you? And any guidance on margins that you can put out?
So we have been working on several things, as you would recognize, Ekta. So we have been working on, in fact, the gross margin improvement, which also encompasses things like, alternate vendor development, routes to synthesis, and the like. On the freight front, we have been trying to kind of rationalize by looking at more ocean freighting rather than air freighting. We've done a lot of work when it comes to manpower also, and this is across various, the specialty business, of course, and businesses as in Brazil and the like. We've done some fair bit when it comes to India, the R&D and other functions as well. The manpower cost in particular, you would see, it has come down significantly. The first quarter, it was close to 794 crores, leading to about 22% of our total sales. If you look at the second quarter, it was down to 685. It went up slightly this time because of overall, because of increments and the like. But there's been a fair bit of rationalization captured in all of these numbers. The specialty business, of course, Brazil, as I mentioned, and the bits in India. So going forward, you'd be containing it around the 18% mark. If you look at the other lines, we've done some good work in terms of productivity on the R&D front. Some pretty good work when it comes to operating leverage using in terms of the promotions and selling expenses and the like. So there has been tremendous progress all over, and we are also embarking on a digital strategy. So so all of this actually bore fruit. And this time around, as I said, the EBITDA margins are 18.6%. In Q4 itself, I would say that the overall, the run rate would be over 20%. The target would be to get to 22 odd % in terms of the EBITDA margins on a normalized basis, as a base case, so to speak. When it comes to, in fact, introduction of newer products in the market, it could spike up to 26, 27 or whatever, but we would expect the base to be at least at 22%, and that's our target.
Nilesh, the India business has grown by over 5%. How has India performed, both COVID as well as non-COVID? And any thoughts on the acute portfolio recovery? Do you expect it to continue?
It's 5.3%, so it's much lower than what we would usually expect, but it's great to see that growth coming back both in the market and our own numbers. In the top three areas, all chronic, there's been very solid double-digit growth, and we are looking at, getting back to double-digit growth across the board next year. Segments like anti-infective, segments like gastro are still impacted for the market and for us, and I think that's what's dragging things down a little bit. But we would hope that in the next few months those start picking up as well.
Vinita, what is the update on the 13 observations issued to the Somerset facility?
So we've not, as you can imagine, not happy about the 13 observations. Was certainly a very intense inspection lasting almost 2 months. But as we looked at the 13 observations, they were bucketed in 3 or 4 areas. The biggest one that was a concern for us was in investigations, which has been a challenge for us. While we had made improvements, made enhancements, the agency saw the potential of additional improvements, that scope that we had, we could make. And apart from investigations, which, has been a very strong focus for the organization, and the plans that we have in place at a corporate level, we have rolled it out in Somerset as well. But the other areas were procedural nature, like cleaning operations, as well as building controls, which cleaning operations in particular struggled a little bit through COVID. But, we're very diligently working towards resolving all of the issues with the agency. We have made, we've responded to the 483 already and provided a first update, getting ready to send in a second, but working really hard to meet and exceed, the expectations on all the new areas that they've identified as, potential areas for improvement at the site.
Nilesh, can you give us an update on the Goa, Mandideep, Pithampur unit 2 facilities? Is the remediation complete? And has the US FDA communicated? Because we have seen India-based US FDA inspectors visit Alembic.
So Goa, Pithampur, Tarapur, we've gone back to the agency saying that we're ready. Obviously, we've not had meaningful traction in terms of scheduling a date. I'm very happy to see the fact that FDA has started, certain inspections in India, and we would hope that sooner rather than later they would come into some of these facilities as well. Mandideep, we have a very deep remediation program going on, so we're not ready yet to go back to FDA. I think another quarter, and we would go back to FDA for Mandideep as well. We want to make sure that we also capture some of the learnings from Somerset into some of these plants like Mandideep especially. So we're doing that. There's a pretty deep program, so I think as you saw, in the first quarter of 2020, there was very positive news, one after the other as far as FDA compliance is concerned, right? So we had sites which were, cited for things like investigations. Obviously, the FDA felt that we were on the right track in terms of moving ahead, and we got the EIRs for those facilities. So we're very keen to get them back to, especially, sites like Goa and Pithampur too, we've done quite a transformation at these sites, and it'll be good to get FDA back. And in particular, like Vinita said, there is a very strong corporate control on investigations. We've now rolled Somerset into it as well, and we have to just keep at this. I think with COVID, it's going to be a little bit of time before FDA comes to all the facilities. So we're thinking right now, possibly late in the second half of the calendar year, unfortunately, most of FY22 will go in getting these inspections and then clearing them. But this is a top priority for the company.
Nilesh, but is there a larger problem that the company is facing on US FDA issues, because there are multiple plants which are currently under the scanner?
I think with 5 facilities, first of all, there is no question that we have more than our fair share of compliance issues, and we recognize that as a company. That's why we took on a much more deeper transformation program. So we call it Quality First. There's a global quality action program that is going on as well, so that issues which are picked up at one facility are taken across the board. That being said, issues like investigations, it's amongst the top 2 cited observation across all FDA inspections. So it is a target that keeps coming back. But I think Lupin has had more than its fair share, and that's the reason why there's a disproportionate focus on making sure that we get this right, doing whatever it takes to get this right as well. I would not color the rest of the inspections with the Somerset one. There were some particular nuances in Somerset which are different from India, in addition to just the geographical difference. I suffice it to say that we are gearing strongly to be able to address these. We recognize that we need to get this in place so that that steady funnel of products keeps coming. We're very fortunate that the bigger group drivers are coming from facilities that are compliant, but we also know that we have to get this behind us. Literally nothing can hold us back at that point of time. So it's very clear that we need to get this done now.
By the way, DRL numbers are up for you on your screen. Broadly, at least operationally, they appear to be in line with estimates. So the company has reported a revenue of 4,929 crores. So it falls short of our estimates by just 20 crores. So that would be a growth of 12 to 13% on the top line, in line with estimates.